Hello friends, welcome to Letstute Accountancy. So today we are starting with a new chapter, that is fire insurance claim. It is very simple chapter and very interesting, and there are no journal entries in this accounting chapter. So let's get started. Now for example, there is a company, any trading, manufacturing company. They always have a risk of loss of their stock or loss of their property due to fire accident. So they have a risk of loss of stock or maybe any property, or it can be loss of profit by fire, or it can be accident or anything. Now to cover this loss, what company does? Company takes an insurance policy. So company goes to an insurance company and takes the policy from this insurance company. While we take the policy from the insurance company, we have to pay premium. So this premium will depend upon the policy amount. So depends on your policy. So if your policy is for 5 lakhs or if it is for 50 lakhs, so that on that amount depends on your premium. So this policy is taken to cover the risk. So basically, company has a risk of this loss of stock. If there is any fire, then the stock can be lost or the property can be lost. And to cover this risk, company goes to insurance company. Company takes the policy that we call as sum insured, and against that policy, company pays the premium. Now generally these type of policy are for 1 year. Now if company suffers the loss, then insurance company pays claim to the company. If the company does not suffer any loss during that particular year, so for example, if the policy is taken for 2019 and company does not suffer any loss in that year 2019, then insurance company is not going to pay any claim. So if company suffers the loss, then insurance company will pay the claim to the company. Now in this chapter, we are just going to cover loss by fire. So we are not going to cover other losses like loss by accident or any loss by theft or any natural calamities, nothing. We are just going to cover loss by fire, and in that also particularly we are going to cover loss of stock. Now what we are required to do in this chapter, when company has suffered a loss, company will go to insurance company and company will have to file a claim, because when company files a claim, then insurance company will compensate for that loss. So when company has to file the claim, company will have to inform to the insurance company how much loss of stock has company suffered. So in this chapter, our basic motive is to find out what was our stock amount when there was a fire in our godown or maybe in office premises where the stock was lying, and how much the loss the company suffered, against which company will file a claim. So in this chapter, we are going to do all the accounting from the viewpoint of the company. We are going to calculate claim from the viewpoint of the company and not from the insurance company viewpoint. Now once the company files a claim, then insurance company does the survey and then insurance company pays the claim amount. But that we are not going to do. We are just going to see from the company's viewpoint. So basically, if we see the steps, there are only 3 steps which we require to do. First, we need to find out stock on date of fire, because we are dealing with the loss of stock due to fire. So first step over here is stock on date of fire. So we will have to inform to the insurance company that when there was a fire, there was a stock of 10 lakhs in our godown, or there was a stock of 50 lakhs in our godown. So we need to find out how much stock was there at the place of fire on the date of fire. Okay. Second step is we find out actual loss. Now not necessary that when there was a fire that all the goods are lost. There can be some goods which are saved, which we known as salvage. So actual loss. So if I say that there was a stock at the place of fire was worth of 10 lakhs, and out of which there was a salvage or the savings of the stock of 1 lakh, then I suffer a loss of only 9 lakhs. So that is your actual loss. And third step is we want to find out claim. So basically we'll first discuss all these 3 steps and then we'll move on to the sums. Now stock on date of fire we'll discuss in the next session. So first we'll see what is actual loss and what is claim. So assume when we are calculating this actual loss and claim, assume we already have the stock amount on the date of fire. So if we have a stock on date of fire, if we deduct salvage from that stock, that is the savings of the stock, it might be possible that the entire stock is not burnt due to fire. There are some stock which could be saved, which can be sold after reconditioning or making some expenses on those stock. So that is called as salvage. So from the stock on the date of fire, if we deduct salvage, we get the actual loss. So we'll just see this example. Cost of stock on the date of fire is 90,000 and the salvage is 6,000. Find out the actual loss amount. So what will be your actual loss amount? When we say cost of stock on date of fire is 90,000, less what we do? Less salvage. So we are saying when there was a fire, we had a stock of 90,000 in our godown or maybe in the premises where there was a fire, but out of which we could save 6,000 worth of stock. So our actual loss which company suffered is only 84,000. So 90,000 minus 6,000, so actual loss we suffered is only 84,000. So in this case, what we have to do, we need to find out stock on date of fire, that we'll discuss. Salvage they generally give you in the question, so that you deduct from the stock, cost of the stock, and you get the actual loss. And do remember that the insurance company will compensate you for only the actual loss which you suffered. So if there was a possibility that there was a stock of 90,000 when there was a fire, but actual stock which was burnt was only 20,000 and we could save 70,000. So salvage was 70,000. Then our actual loss would be only 20,000. So insurance company will compensate us for that 20,000 only. Insurance company will not compensate for 90,000 because our actual loss suffered was only 20,000. In this case, our actual loss suffered is only 84,000. Now, that is the second step. So that is very simple. Once you find out stock amount, you just deduct the salvage and you find out the actual loss. Third is your claim. Fire insurance is a contract of indemnity. As a result, the owner of the goods cannot claim more than the amount of actual loss sustained by the fire. This we recently discussed. It is contract of indemnity. That means if you suffer a loss, then insurance company will compensate you for that loss. In this case, stock was for 90,000 but you suffered loss of only 84,000. So insurance company will compensate you only for the actual loss which is suffered by the company and not for the stock amount. Okay, so always remember that your claim amount will never ever be more than your actual loss amount. Claim would be equal to your loss amount or it can be lower than your loss amount, but it cannot exceed your actual loss suffered by the company. Okay, now when we find out the claim, there can be two possibilities, that the total loss, there is a total loss and there is a partial loss. What do you mean by total loss? The goods which are there at the place of fire are totally destroyed. So there is no salvage. Whatever the stock was there on the date of fire, that is totally destroyed and we could not save anything. So that is totally destroyed. And partial loss, there is a goods which is partially destroyed. So in this case, this is the case of partial loss because there you could save 6,000 worth of goods. So our actual loss is only 84,000. So there can be two possibilities. One is total loss and other is partial loss. Again, there can be two more possibilities, that your entire stock is fully insured, or it can be possible that there is the underinsurance. Now what do you mean by fully insured? Whatever the stock which is there in your godown is fully insured. So for example, if my stock in the godown at the place of fire is worth of 1 lakh, I will be having a policy worth of 1 lakh or more than the 1 lakh. Okay, so my stock is fully insured. What do you mean by underinsurance? Now my stock in the godown is 1 lakh, but the policy would be lower than the 1 lakh. So policy could be of only 70,000 or 90,000, but that would be lower than the stock on the date of fire. So that is called as underinsurance. So two possibilities again, fully insured and underinsurance. Now first, when there is a total loss and if your goods are fully insured, you will get the claim amount exactly equal to your actual loss amount. Okay, now in this case your actual loss and stock on date of fire would be same because this is the case of total loss, there is no salvage. So we can say stock on date of fire is equal to your actual loss because there is no salvage and will be equal to your claim because it is fully insured. So just to discuss this example, we will take the examples for this claim amount. For example, stock on date of fire is 1 lakh. All the goods are destroyed. So this is the case of total loss. And sum insured or the policy value is 1,50,000. So now in this case, first you find out, is it fully insured or under insurance? So stock on date of fire is 1 lakh and your policy value is 1,50,000. So your policy is more than your stock. Therefore, this is the case of full insurance. So that is fully insured, your stock is fully insured. And if this is a total loss and if the stock is fully insured. So now if we see, there was a stock of 1 lakh, all the goods are destroyed. So my actual loss is 1 lakh and I have a policy of 1,50,000. So insurance company will compensate for my entire loss suffered. So in this case, the claim amount would be equal to 1 lakh. So amount of claim is equal to actual loss and our actual loss is 1 lakh because there was no salvage and entire stock was lost. So guys, this is very simple. Now always remember, though you have a policy of 1,50,000, insurance company is not going to pay you 1,50,000 because you have suffered loss of only 1 lakh, and that we discussed previously that you cannot claim more than the amount of loss you suffered. So you can claim up to maximum 1 lakh. Okay. Now second situation, if all the goods are totally destroyed, so this is the case of total loss, and if it is under insurance. Now what do you mean by under insurance? Now if we see this, stock on date of fire is 1 lakh, but the policy is 70,000. So if we say stock is 1 lakh, but our policy values or sum insured is 70,000. In this case, your stock is more than the policy value. So do you have the full amount of policy? No. So this is the case of under insurance. So in this case, if this is the case of under insurance, now we have suffered a loss of 1 lakh, but we have a policy of only 70,000. So insurance company will compensate us only for 70,000. Though we have suffered a loss of 1 lakh, but we don't have the policy of that much amount. So in this case, our claim amount would be only equal to 70,000. So if it is your total loss and under insurance, amount of claim will be restricted to the policy value because you don't have more amount of your policy. Your sum insured is lower. Now, next situation, if it is a case of partial loss. What is partial loss? Your total goods lying at the place of fire are not destroyed and some goods have been salvaged. So goods are partially destroyed, and again there can be two scenarios, if it is fully insured and if it is under insurance. Now if it is fully insured, your amount of claim will be equal to your actual loss. We'll just see the example. Now if the stock on date of fire is 1 lakh, salvage is 20,000. So this is the case of partial loss. There was a stock of 1 lakh, but we could save 20,000. So in this case, stock on date of fire is 1 lakh, but there was a salvage of 20,000. So actual loss which is suffered by the company is only 80,000. Now your policy is 1,50,000. So is this the case of fully insured or under insurance? Now this 1,50,000 you will compare with 1 lakh or this 80,000. Guys, you will compare with this 1 lakh because policy is taken for the stock and not the loss. Policy is standing for the stock. So we compare stock with the policy value. So in this case, what we compare, 1 lakh is your stock and your policy is 1,50,000. So your policy is of more amount. So therefore this is the case of fully insured. Your goods are fully insured, your stock is fully insured. And if your stock is fully insured, they will give you the actual loss suffered. Insurance company will compensate for your actual loss. So in this case, your claim amount would be equal to your actual loss, which is 80,000. So what is the difference between this and this? Now in this case also there was a total loss. In this case there was a partial loss. 1 lakh goods, but there was a salvage of 20,000 over here. Over here all the goods were destroyed. So in this case your actual loss is 1 lakh. And in this case, your actual loss is 80,000. Both the cases are fully insured. So if your goods are fully insured, you get the claim of the actual loss you suffered. In this case, you suffered the actual loss of 1 lakh because the totally goods are destroyed. And in this case, actual loss is 80,000. So claim received is 80,000. Now company will not pay you claim for 1 lakh because the company suffered the loss of only 80,000. So insurance company will compensate you for only 80,000. And the last situation, if the goods are partially destroyed and if it is a case of under insurance, now in this case we will have to see whether there is an average clause or there is no average clause. First of all, we'll see without the average clause. So you don't see what is average clause anything. If it is partially loss, if there is a case of underinsurance, your claim would be actual loss or sum insured, whichever is lower. So first of all, you will have to find out if the goods are partially insured or fully insured. So stock on date of fire is 1 lakh, salvage is 20,000. So in this case, your actual loss is, over here, your actual loss is 80,000, same like this example. But in this case, your policy value is 50,000, or I have taken one more case over here as 90,000. So first of all, we'll deal with this 50,000. Now your stock on date of fire is 1 lakh, but you have a policy of only 50. So this is fully insured or under insurance? Yes, this is the case of under insurance. So partial loss and under insurance means this is the case, partial loss and under insurance. So if there is no average clause, your claim amount would be actual loss, which is 80,000, or sum insured, which is 50,000, whichever is lower. So your lower amount is 50,000. So guys, this is very logical. There was a goods of 1 lakh. We could save 20,000. So loss was 80,000. We are going to insurance company for filing a claim for this 80,000. But then we realize we have only policy of 50,000. So company will compensate only 50,000 because our policy is of only 50,000. So over here the claim amount is 50,000. Now situation 2, if your policy is of 90,000. Again, is this the case of under insurance or fully insured? First of all, 1,20,000, actual loss 80,000. So this is the case of partial loss. All the goods are not destroyed, only part of the goods are destroyed. And is it fully insured or under insurance? Now be careful. If you compare this 90 with this 80,000, you will feel this is fully insured, but that is wrong. You always compare your policy with the stock, because we take the policy for the stock. Okay, we are not taking the policy for this loss. We get the claim from the insurance company for the loss, but policy is taken for the stock. So if we compare 1 lakh with 90,000, again this is the case of under insurance. So this is the case of partial loss and under insurance in both the policy values, even if it is 50,000 or if it is 90,000. So again, claim would be actual loss or your policy value. What is your policy value now? 90,000, whichever is lower. So over here your lower amount is 80,000. So guys, you understood this? Now see, actual loss suffered, that you understood, that 1 lakh minus 20 is 80,000. In first case, against this loss of 80, you had a policy of 50. So insurance company cannot compensate you more than 50 because your sum insured is only 50,000. So you got the claim of 50,000. In second case, you had a policy of 90. So insurance company can compensate you for 90,000, but loss you suffered is only 80, and you cannot get claim more than your loss amount. So in this case, you got the claim of only 80,000. So this is actually very logical. You need not remember this or learn this. This is very logical. You always compare your loss with the sum insured. If your loss amount is lower than your sum insured or policy value, you will get that loss amount only. But if your policy amount is lower, even though you suffer more loss, you will get only the claim up to your policy amount or your sum insured amount. So that is the case when there is no average clause. Now if there is average clause, in case of average clause, we see the proportionate basis. Now what we see in the proportionate basis? So for example, for the stock on date of fire, we have a particular amount of policy. So whatever the actual loss we suffer, how much we'll get for the claim amount. So going with this example, now stock on date of fire is 1 lakh, and against which we had a policy, first case is only 50,000. So now if you see, for 1 lakh worth of stock, we had a policy of only 50,000. So when you suffered a loss of 80,000, how much claim you'll receive? So your claim would be just cross multiplication. So that is 80,000 into 50,000 divided by 1 lakh. So you'll receive the claim of only 40,000. Again in the second case, your stock on date of fire is again 1 lakh. But in the second case, your policy value was 90,000. See, against 1 lakh, policy is 50,000, 90,000. So this is the case of under insurance. And since there is a salvage, this is a case of partial loss. Now you suffered the actual loss of 80,000. So how much claim you will receive? So in this case, your claim amount would be 80,000 into 90,000 divided by 1 lakh. So now you'll get a claim of 72,000. So what we do, we just see the proportionate basis. So against the stock on date of fire, this much is the policy. So against your loss, how much would be the claim amount? So if there is average clause or if there is no average clause, which we also term as general clause, see your claim amount differs. If you just compare your loss amount with the sum insured amount and we take the lower amount, and over here we see the proportionate basis. So you'll have to check the sums. If they are specified, apply the average clause, you have to go with the average clause. If they don't specify the average clause, then you'll have to go with this general policy. These 3 cases were very simple. So now we'll just quickly review this. Loss by fire, if this is a total loss, all the goods are destroyed and the goods are fully insured. So whatever loss you suffer, you will get the claim amount. If it is a total loss, all the goods are destroyed, but this is the case of underinsurance. So you get the claim maximum amount of the policy value because the policy value is lower than your loss amount. So amount of claim will be restricted to the policy value. Even when you will ask for the more loss amount, but you don't have sum insured that much. So you will get the claim up to the policy value. If it is a partial loss and it is fully insured, again whatever loss you suffer, you will get the claim amount. But if it is partial loss and this is the case of underinsurance, you will have to see whether there is average clause or there is no average clause. If there is no average clause, you just see actual loss or sum insured, whichever is lower. And if there is an average clause, this is very simple. People try to remember the formula like claim is equal to loss into policy divided by stock. You don't remember the formula. This is very simple. Against this much stock, this is the policy value. So against this much loss, what would be the claim amount? So you just cross multiply. Okay. So here we complete our first session. This was very simple, where we just discussed the basic what is this chapter all about. There are 3 steps, out of which we already discussed 2 steps, that is actual loss and claim. Actual loss is just stock minus salvage, and for the claim you will have to see whether it is a case of total loss or partial loss. So in next session we'll discuss more about the stock on date of fire. Thank you.